Hey everybody, this is Beth Durinsky from Odyssey Insurance and Investments, and you're listening to the podcast, Real Insurance Made Simple. As a working mom of young kids and a small business owner, I know firsthand life happens. So come along with me and learn how your insurance policies work when real life happens and you need them most. Hello everyone, and welcome back to our third episode in our mini-series on business insurance. This week we are discussing a commercial insurance package. Some people also call them business owner policies, otherwise known as a BOP. There are a few different components to a commercial package or a BOP policy. The first one being the liability portion, the next portion being the property coverage, both structural and business, personal property, and the third portion being the endorsements to help fill the gaps. So the first thing that we are going to start out talking about is the liability portion. As we previously mentioned last week, the liability portion is designed to protect the business from financial harm in the event that the business is found liable for bodily injury or property damage. So let's go ahead and start with general liability. Typically, general liability is for the premises or location where the business is held. Let's go ahead and go through an example because I know that these are a little easier to kind of walk through. So let's think of a mechanic shop today. Typically, your general liability is going to provide coverage for trip and falls. As customers are coming and going from the shop, for example, someone walks in to pay their bill, they drop off their keys, they come in to pick up their keys, and they trip and fall, your general liability is going to cover that. The important thing to remember as you work through your liability coverages, your current policy that you already have, or maybe you're getting a business policy for the first time because you're a new business, is that general liability is not professional liability. Again, general liability is going to be more of your trip and falls and your accidents, whereas your professional liability is going to be you making a mistake in your job, you making an error. Sometimes we call this the malpractice, like a doctor who performs a malpractice in his job. So let's dive in a little more into our mechanic example. Let's say you go to a mechanic shop to get new tires. You leave, and as you're driving down the road, that tire blows out and you have a terrible accident damaging your vehicle as well as harming your bodily injury. If that occurred due to a faulty tire or a tire that was malfunctioned during manufacturing, the company who produced that tire would be found liable, and they would then cover your property damage and your bodily injury because they were liable for the malfunction of the product that they made. Now, let's use that similar example. You go to that same mechanic shop, you get a new set of tires, but on the way home, the tire falls off because it is not properly put on. That is no longer a liability due to a manufacturing issue. That is going to be due to faulty work or an error made by the mechanic. This is where professional liability comes into play. If you only have a general liability policy, that is typically not going to provide coverage for professional liability or in errors and omissions. That is completely separate. There are some commercial packages with general liability that will allow you to endorse that policy or add that professional liability on, while others do require you to purchase a whole new and separate professional liability policy. It is very dependent on the insurance carrier and the insurance package that you are being quoted or that you are reviewing with that agent. I should also clarify that technically when we look at that tire scenario, that actually comes from what's called product liability. The majority of the time when you get a general liability policy, it does include product liability. But because, again, general liability is more like someone walking in, tripping and falling over the doorstep or an extension cord, product liability gives you coverage for products that you're making. So typically they're both on a standard liability policy, but it is best to check with your agent to make sure you have both aspects. Also, we always think of those larger businesses for that product liability. Oh, this large company makes a bunch of cars every day and they mass produce them, or like the tire scenario I gave you, or maybe someone is a large furniture producer like the warehouses that we see. They should all have product liability for the products they're producing. But where we don't think about it is a lot of times, especially in our local communities, we have someone that can make lotions or soaps, or maybe we have a skilled woodworker and he's making handmade wood benches. Those are all products that you're making and you're putting out there. What if that lotion breaks someone out in a rash? Those are all things to think about. So for the liability portion, we have our general liability, our product liability, and professional liability. Not all liability policies are made the same. A lot of people think, oh, I have insurance, so I'm covered. But you may not be covered for everything, or you may not be covered for what you specifically need. Go ahead and check with your policy, review your policy, and meet with an agent if you have questions. Now, we're going to go ahead and move to the second part of a commercial package or BOP policy, and that would be the property coverages. The property coverages could look a little bit different for everyone. It really is preference here. You typically get property coverage to protect your building, your structure, the things that you own. In the event you have like a fire or a tornado that destroys your physical items that the business owns and that you want to have insurance on, that's where the property coverage is going to come in. This is kind of comparable a little bit to home insurance. We're used to hearing about home and auto where we're protecting our physical items. Now, not getting into the weeds, those items also have liability, yes. But that's what a lot of people think about when they think about the home and auto, is their physical coverage on those items. And this is where the property coverage comes in on these commercial policies. You're looking for physical coverage on the items that the business owns. Let's start with the building. You own a storefront. You want to protect that storefront in the event there's ever a fire or tornado or a cause of loss. So we're going to use round numbers for this example. Say your storefront cost you $100,000. Here's the trick with business insurance on property coverage. They're typically insured with a co-insurance clause. What does that mean? I know, we're going to get in the weeds and we're insurance, so we're going to make things confusing because that's what we do. That co-insurance clause is indicating that you are promising you're going to insure that building at 80% or 90% to value, whatever your co-insurance value is on your particular policy, or at 100% to value. And I believe there's a few out there that will offer 70%, but the common numbers are 80, 90, or 100% to value. So like I said, we're going to use $100,000 for our example. Your storefront building that you own is valued at $100,000, meaning if it burnt down, the replacement value of that to rebuild would be $100,000. Let's say you're choosing to agree to an 80% co-insurance clause. That 80% co-insurance clause means that you were promising you will insure that building to at least 80% to value. So you are going to insure that building for at least $80,000 at a minimum. $80,000, $85,000, $87,000, but at a minimum $80,000 because you've agreed to an 80% co-insurance clause on a building that is valued for replacement cost at $100,000. This is where the tricky part comes in. So say you've actually insured that building for $70,000. Now, in the event of a total loss, that's not a huge deal because $70,000 is your limit, even though you have a $100,000 building. However, if you have it insured at $70,000 for a building who has a replacement value of $100,000, that means you're below your 80% coinsurance clause. And in the event you have a partial loss, not a total loss, a partial loss on that building, and you just need a portion of that building fixed through a claim, you will be penalized with a coinsurance penalty. So what does that coinsurance penalty look like? Remember, replacement cost on the building is $100,000. You have it insured for $70,000, so it is less than your 80% to value. So what happens is, say you had a partial loss. Say you're a restaurant and you had a kitchen fire. So the whole building didn't burn down. Fire extinguishers and the fire department got it put out just in the nick of time. But you have a partial loss on just the kitchen area of your restaurant. Say it is a $30,000 loss. That means the claim totaled up to repair the kitchen at $30,000. You are not properly insured at 80% to value. The formula for that is taking the amount of insurance you have in place, so $70,000, and dividing that by the amount of insurance that should have been in place, $100,000, which gives you 0.7. You're going to then multiply that 0.7 by the actual loss, that $30,000 loss for that kitchen repair. That means the amount you would be paid out via a claim due to your coinsurance penalty would not be $30,000 minus your deductible. Instead, it would be $30,000 times that 0.7 from your coinsurance penalty, and the actual amount you would be paid out on a $30,000 loss would be $21,000 minus your deductible. So I know what everyone's going to say back to me, well, Beth, that's not fair. Why are they making me insure it to this much? That building is not worth that, or I would not replace it for that. If something did happen, I would replace something different. Well, because insurance companies had found themselves in hot water before, essentially is where that comes from, where someone said they didn't want that much in coverage until it came time to the claim. Or B, a lot of them do give you the option to do what's called agreed value, which means you are picking your limit on the building. It is the limit. You are agreeing to the limit on that building, and that is that. There's no coinsurance penalties typically with agreed value, and that is one way around that, but not all carriers offer that. All right, now let's move on to the business personal property. For the business personal property, these are typically items that do not leave the premises. They stay at the site of the business. So for the mechanic shop, it may be the large tools, a lift, things of that nature. For a grocery store, it's going to be the cash register, right? Things that are not going to leave the place of business. And then you can cover that on a blanket. You can just do a business personal property limit amount. There's different ways you can do that. I would definitely talk to your agent when it comes to that. In addition, a lot of times a business personal property limit could also have a coinsurance clause, or it could be to agreed value. So you want to make sure that limit properly covers the business personal property that you have on the premise. Okay, a couple more things that I want to hit on in regards to personal property of the business. The first one being inland marine. These are tools and equipment that you're going to take with you and that leave the premises of the business. So, for example, you are a contractor and you install different things. Maybe you're an electrical worker, or I don't know, or for example, I'm an insurance agent. I take laptops with me. These are things that leave the premises. That would be inland marine. Anything that leaves the premise isn't going to be covered under your standard business personal property. because that is associated with the location. It's location specific. Whereas inland marine, you have coverage for that while it's in transit from one location to the other, while you're on the job site. So if you are taking tools or equipment with you, you should really schedule that onto the policy. And every company calls this something different depending on the type of business you are or what you're trying to schedule on. Maybe it's scheduling on contractors' tools and equipment. So just as an example. The final thing I want to touch base with you on is kind of a hybrid between liability and property coverage. And this is more specific to someone like a mechanic shop or a body shop. And that is called garage keepers. And what that is it gives you coverage for something that is in your care, custody, and control, like someone else's vehicle. So you are a mechanic shop, you have 2 or 3 different vehicles you're working on. You are now responsible for the coverage of that vehicle. Maybe your building catches on fire. You have garage keepers coverage. So it works like liability in the event it doesn't protect your items. It's protecting someone else's, but it is the physical coverage for someone else's vehicle while it's in your care, custody, and control. The third portion of the commercial package comes in the form of endorsements. And I know I mentioned last week that the episode order was going to be the commercial package and then the commercial auto. But I think next week we're actually going to squeeze in an episode on endorsements because that can kind of get in the weeds. I'm going to try to keep it high level. So we're going to look at that next week. I have mentioned a few different endorsements somewhat in this episode, so you may hear them be repeated next week, but we will definitely go into that more. Endorsements are important because, again, not all insurance policies are made the same, and if you don't have certain endorsements put onto your policy, that means you actually have several gaps in coverage. Maybe those gaps in coverage are okay with you. Maybe you did not realize you had that and you thought because you had insurance you were just covered, and that may not be the case. That's why it is very important to review your insurance policies on a regular basis and to sit down and review with an agent. So a quick recap. 3 parts to a commercial package policy. The liability. What types of liability do you need versus what you have? What are the limits of your liability? You want to make sure the liability limits are enough at a minimum to cover the business assets. The second part is the property coverage. What physical pieces of property does the business own that you need coverage for or would like coverage for? And what types of tools and equipment are required for the business to run and operate successfully? If a tornado or a fire wiped you out, would you be out of business? Is this coverage important to you? All things to think about. If you have property coverage, are the limits on that coverage sufficient? Do you have a coinsurance penalty? What deductible are you comfortable with when it comes to applying that to your physical coverage? So what deductible amount are you comfortable with paying first before the coverage kicks in? These are all ways you can review your current policy. Finally, what endorsements do you have? How do they work? And what do they provide coverage for? We're going to touch base on those next week. Check in next week for those. And the final piece I want to leave with you today is the importance of having a conversation about your business coverage. Don't lose everything that you've poured your blood, sweat, and tears into to build, to grow, to keep moving every day because you didn't know you weren't properly covered. Let's go back to that mechanic shop. Maybe they decide they want to do more than just mechanics and they move into body work on the vehicles. Have they notified that to their agent? It's an easy progression as you're growing a business, but your insurance agent needs to know how those business operations are changing to try to help mitigate those risks for you. We want to help mitigate risk, and we can only do so when we know the full and complete information of how the business runs and operates. Another good example is maybe you're a landscaper, and as you're getting into the landscaping business, you're growing and expanding, and now you want to expand into cutting trees. A lot of insurance companies offer coverage for landscapers. Very, very few offer any coverage for cutting trees. Typically, that is its own coverage. It has what's called its own class code, and that's not hardly ever covered under a landscaping insurance policy. So again, make sure you're covered. Have that conversation with your agent and make sure your policy properly reflects what you're asking for. And honestly, it is nice to call and start the process over the phone. We would love to help. Give us a call. But it is even better if you can schedule a sit down with an agent to have a full, in-depth, in-person conversation. And even better, if you have a place of business that agent can come to and review and walk around your business and get a full understanding of how you operate and the things that you're doing. Look at that insurance agent as an advisor to protect your financial assets and help you mitigate those risks. If you don't have anybody in your corner to help you do that, we would love to help you here at Odyssey Insurance and Investments. Please give us a call, 812-932-2200. And again, my voice kind of broke out there for a minute, 812-932-2200. Have a blessed day, everybody.
Thank you all for listening today. We hope you found this episode helpful and informative as you navigate the world of insurance. As a reminder, this podcast is never for legal or professional advice, and you should always consult your local and licensed insurance professional. We wish you a week filled with love and blessings from the team at Odyssey Insurance and Investments.